Thank you, Alice, for the introduction. Thank you. Honorable guests, ladies and gentlemen, good morning. It's my pleasure to speak here today about the strategy to reconnect China. After years of COVID restrictions, I finally traveled to Beijing twice this year. I saw a bustling metropolis of glistening modernity and profound history. I also met government officials eager to revitalize the economy and financial executives ready and keen to expand overseas. And they were all keen to use Hong Kong to connect with the rest of the world. When China reopening in 2023, many of us in Hong Kong are looking for a breath of fresh air. Indeed, in the first quarter, the licensed corporations under major investment bank saw a twofold jump in their net profits before tax compared to the previous quarter. Total income also rebounded by a high single-digit percentage. However, we can only be cautiously optimistic for now. COVID no longer make the headline, but geopolitical tensions seems to be here to stay. To tame global inflation, policies took U-turn to quantitative tightening and rate hikes. Then came the collapses of some U.S. regional banks and the global bank. Through such turbulent time, our capital markets and licensed firms have shown remarkable resilience, thanks to their rigorous risk management measures. So now let's rethink our strategy in the complex new landscape. Many of you told me geopolitical risk is the most difficult one to navigate. There has been some talks about de-risking China, and let's not forget China's capital market have become too big to ignore and too globally integrated to be decoupled. Globally, mainland China's stock markets have raised the largest amount of funds from IPOs last year and so far this year. Also, China accounted for 33% of Asia's international bond issuance last year. Foreign investors are holding more than 3 trillion renminbi in mainland bonds and 3 trillion renminbi in A-shares. In reverse, the value of U.S. treasuries held by mainland investors is close to US $900 billion. Moreover, mainland banks have lent more than $400 billion to non-financial institutions overseas. And in the past 3 years, global leading financial institutions have invested billions, multi-billions, and set up more than 10 wholly owned securities firms, mutual fund companies, or futures companies onshore. Despite temporary setbacks, it is clear China will continue to integrate with global capital markets, and Hong Kong's intermediary role in the mainland's market opening remains critical and will only expand. Our strategy is agile and has allowed us to move with the times. The first part of our strategy is to reconnect with China, is about Hong Kong as a fundraising center. In recent years, the SFC and the Stock Exchange have adapted listing rules to facilitate the listings of mainland enterprises. The WVR structures, the homecoming of China concept stocks, and the biotech listing regime have all helped finance China's booming new economy and deepening the pool of growth stocks listed in Hong Kong. New economy stocks now account for about 40% of our equity market capitalization. For biotech, Hong Kong has become Asia's largest fundraising center. We must therefore keep our approach agile. We believe our latest listing regime for specialist tech companies will help finance China's economic transformation and help tech startups fast-track their growth. We are also working to diversify sources of listing and attract enterprises from across the region. Second, we must further deepen our Connect schemes with mainland markets. For 9 years, Connect has offered efficient access to mainland markets. The Stock Exchange provides a set of familiar international rules and practices for global investors to diversify allocation across the mainland and Hong Kong markets. This allows them to comprehensively tap into China's growth story. Net inflows through Stock Connect have been strong since its launch, with total of renminbi 2.3 trillion southbound and renminbi 1.9 trillion northbound. Eligible stocks now cover more than 80% of equity trading in Hong Kong and mainland markets. We also observe that southbound investors favor large-cap mainland enterprises in communication, energy, financials, consumer, and IT sectors. Now, this Stock Connect is what Alice referred to when she was at the SFC and I was in the government, and we together built it, along with, of course, the exchange and HKMA. Just a year ago, ETF Connect was introduced and has been an instant success. Average daily southbound trading for equity for eligible Hong Kong ETFs make up about 20% of their average daily turnover. And the story of Connect is just unfolding. The SFC is looking into block trading and other practices to improve efficacy. We are also enhancing other schemes like Wealth Management Connect, so stay tuned. Third, Hong Kong has come a long way to evolve into the offshore renminbi hub that it is today. Investors now enjoy diverse renminbi investment products in Hong Kong, backed by a deep renminbi liquidity pool. The city must continue to enhance its pivotal role in renminbi internationalization. The last 2 decades of development can be divided into 3 phases. The first phase started in 2003 after the SARS epidemic, with the launch of personal renminbi business in Hong Kong. After the global financial crisis, the second stage took off in 2009 as the mainland allowed the use of renminbi to settle cross-border trade. In 2014 came the golden era. The launch of Connects boosted offshore renminbi adoption and enabled its free circulation between Hong Kong and the mainland in a closed loop. We expect the renminbi to gain further traction as an international investment and reserve currency as US dollar funding costs go up and political alliances shift. The SFC is pulling its weight to enhance Hong Kong's role in this process. We are already seeing a much larger issuance volume for renminbi bonds. Just a week ago, the stock exchange launched the dual counter model to facilitate stock trading in renminbi. While this daily turnover averaged only about 200 million renminbi in the first week, this is a meaningful start to build our ecosystem and expand listed renminbi products. We have seen that the market making for more liquid renminbi-denominated stocks is working as designed, with bid-ask spreads narrowed to around 1 to 2 ticks, and the renminbi prices tracking closely the Hong Kong dollar prices. We expect trading to be more active once southbound Connect investors can access the renminbi counter. Fourth, Hong Kong has been at the forefront of sustainability and innovation for financial markets, and we will continue to keep pace. Just yesterday, the ISSB under IFRS Foundation launched its standards for corporate sustainability disclosure. When the standards are adopted globally, banks, fund managers, and asset owners would have a set of consistent and comparable corporate information to help them allocate funding and price sustainability risk. I understand the final standards and adoption guidance have built-in flexibilities to allow jurisdictions to scale and phase in the requirements. We welcome the ISSB standards and will study them closely with a view to proportionate implementation in Hong Kong. We urge companies to adopt the sustainability reporting standards, especially if they do not want to be bypassed by international capital. It is an immense task for China to achieve peak emissions by 2030 and net zero emissions by 2060. By aligning with the new standards, Hong Kong plays a critical role in channeling global resources to mainland and Asian companies to fund their low-carbon transition. To this end, a whopping US $66 trillion in investment will be needed in Asia over the next 30 years by ASIFMA estimate. Those of you from global intermediaries do not want to miss out on the huge opportunities. On the innovation front, we aspire to use fintech to drive green finance and build Hong Kong into a hub for both green finance and fintech. Ladies and gentlemen, Our capital market journey to China is never short of setbacks. But from every challenge, Hong Kong bounces back with resilience. Coming out of COVID, China may still face some headwinds, but it has reopened and refocused on economic development. So let's be patient, stay agile in our strategy, and gear up for a new chapter in our story of connecting with China. You have a very packed conference today, so I hope you'll have a fruitful discussion. So thank you.